According to a recent report by the U.S. Census Bureau, close to 13,000 people turn 60 years of age each day. Baby boomers are the fastest growing segment of the nation's population, and they have reshaped our society in every stage of their lives. As the largest population in U.S. history gradually enters retirement, they are predicted once again to transform the coming years.
The number of people reaching age 65 is going to increase by 80% between 2011 and 2025. And just like the baby boomers in the past caused upheavals in the building of elementary schools, they'll cause upheavals in the building of retirement communities and in the demand for quality income investments. As the baby boomers reach age 65 and they're looking at their current investment mix, they're going to say to themselves, I need income, and they're going to put a huge demand on income investments that are of high quality.
As baby boomers' life expectancy increases and they spend more years in retirement, they will need their assets to last a longer period of time. That's just one of many reasons why financial experts recommend they take charge of their financial portfolio now.
The price of anything is determined by supply and demand. And if we know that there's going to be an 80% increase in the number of people looking for income, then that would mean that the price of those income vehicles would go up simply because demand is so strong. So I think it makes more sense to get your income needs met now before the 80% increase in others looking for the same thing. It basically is supply and demand.
A new poll shows that many baby boomers are worried about their finances, and many believe they'll need to work longer than planned in order to retire. Today, financial experts say investing in pipeline energy transportation is one way to produce a steady income for the long term.
Owning a pipeline is like owning a turnpike. And I'm from Pennsylvania, and I've never gone on the Pennsylvania Turnpike when they reduced my tolls in any given year. They've never been on sale. They always seem to go up every year. So toll roads and turnpikes and pipelines are all the same sort of thing. They charge you a toll to ride on the turnpike. The pipelines charge you a toll to move your oil or natural gas on the pipeline. And they tend to be able to raise their toll charges every year or every other year at a rate faster than the rate of inflation, which means over time, the amount of money that you can receive from this type of an investment can go up significantly.
Master Limited Partnerships, or MLPs, own these large pipelines that transport oil, natural gas, and refined petroleum products across the United States. Experts say these funds are relatively unknown and often misunderstood, yet they have increased at a faster rate than inflation.
Instead of driving cars or trucks, you're driving oil or natural gas through these pipelines, and they go all across the country. And what they charge you is based on distance and how much you're transporting. The pipelines are turnpikes for energy, and you can invest in these and own them and provide yourself with a solid, steady income that historically has grown faster than the rate of inflation. So people have been able to keep pace or beat inflation with their income. And so the prices of the stocks, they've gone up faster than inflation as well because the income is going up. And then you can continue to defer this income for a long time. If they're in your estate when you pass away, there's no tax due on that deferred income. It's all wiped out because of the way the state tax laws are written in this country.
Since these investments are considered safe with minimal risk, financial advisors say baby boomers can still take advantage of them in order to create a steady stream of income during retirement.
A good example of a pipeline company that's been around for a long time is a company called Buckeye Pipeline, which operates in the northeastern part of the United States. Buckeye, during the financial crisis between 2007 and 2009, raised its distribution to its investors from about $3.20 a share to almost $4. This is a time when General Motors and GE and the major banks were in crisis mode and cutting and slashing their distributions. So Buckeye, being typical of the large interstate pipelines in this country, is a good example of how the pipelines were able to increase their dividend payments to investors, even though we were in the worst recession and the worst financial time since the Great Depression.
For more than 2 decades, DeWitt Capital Management has been investing in MLPs nationally, and today they are well-known MLP experts in the Northeast region of the country.
In 1990, I was investing in Philadelphia area companies, and one of the companies in the area is Buckeye Pipeline. And it provided income and tax deferral, and it seemed very solid. So I bought that first MLP back in 1990, and I watched it go from $15 to over $60 and raise its payout from $1.20 to almost $4 during that 20-year period. So I've been investing in these for 20 years. I invest in the MLPs all around the country. I consult with various research houses and people in the industry.
DeWitt Capital Management specializes in helping baby boomers and their parents protect their wealth while generating a lifetime of increasing income.
I'm a baby boomer, and I would like my generation to have a good income in retirement. And with a number of baby boomers entering retirement increasing significantly, I think that if people can get their income needs set early and established, that'll be better for them for the long run.
Recent studies estimate an 80% surge of baby boomers retiring over the next year. If you are one of the 80% worried about your future, call DeWitt Capital for a free consultation today. To learn more about MLPs or DeWitt Capital Management, visit DeWittCM.com. We create income for life for more life in retirement.